Hello guys, this is Zach from Harvest Trade and I'm very much glad to welcome you to our new video. And before we start, let me remind you that every week we have a weekly contest for $500, to participate in which you just need to leave the like and a comment under this video and also subscribe to the channel. And every single week on Monday I will announce a winner who will take those $500. So don't waste any more time, leave the like and a comment and subscribe to our channel to get those $500. I'm sure that it can be yours. And now guys, let's not waste any more time and get to our first currency pair for today, and exactly a pair of Australian dollar and Canadian dollar. And let's get to a technical analysis of this pair. As you can see that our pair quickly went down, reaching its minimum historical values, reaching the support line, and then there was a stage of drops. In principle, now our pair is in constant stable drops, and now after the next resistance line, we see that our currency pair starts to go down again. And now I want to point on the continuation of this fall. And now, as usually, let's get to our topic for today, and exactly a topic of support and resistance lines. Let's start with talking about the power of supply and demand. Before we move on to describing support and resistance, you should understand what is behind this seemingly very simple concept. The market price moves under the influence of market participants, and this is understandable. As we remember from the Dow theory, the market contains all available information. Prices fall when most market participants think they are too high, and they grow when they are, in the opinion of the majority, excessively low. At the same time, the market in its deepest basis does not contain a cipher or key that allows you to find its internal consistent logic. It is like finding the key to a person's character and leaving all psychologists out of work. But it is citizens who move the market. We have a situation where seemingly rationally thinking traders are represented on the market. Those actions are not always dictated by prudence or rational basis. In fact, the trader is constantly torn between fear and greed. There are a lot of participants in the market, like millions of them, and each of them has their own reasons to buy or sell in a given period of time. Millions of participants, millions of reasons. That is why a simple system that would decipher the market aspirations of the masses does not exist in nature. As a result, when working with the market, we are dealing with subjective art, not an existing science. Many methods of understanding the market are based on scientific principles, but the market itself is irrational and not based on analytical calculations. All traders, as a result, closely follow the same price, but each reacts to it his own way, and there is no way to individually predict the actions of each of them. Therefore, we take as an axiom that the fact that the market is the territory of irrationality. He won't act the way we want him to. Therefore, it is critically important to create a trading system that allows you to recognize the behavioral patterns of market participants. Such a system will give you a statistical advantage, allowing you to take profits from the market. The levels of supply and demand are what underlies the psychology of the market. Your market success depends on the ability to determine their strength and weakness. Their main advantage is these zones, which we determine by drawing simple lines on the chart. These lines give a zone of stability that can exist both for minutes and years. Not surprisingly, technical analysis is based on support and resistance. This is a concept that is easy to understand, yet it is not given to many beginner traders. And now guys, as we can see that our deal is closing in the way we want it. And while we are taking our W, I want to remind you that if you would like to join our VIP channel or a free channel, you need to follow the link in the description. I will be more than happy to see you there and hope that together we can make a profit and build a huge traders family. And also, please don't forget to subscribe to the channel and leave the likes in the comments, because for me, seeing how our family is getting bigger every single day is just so inspiring. I'm very happy to do it, and I'm very happy that I see that what I'm doing and what I'm giving you, the knowledge is very useful for you. So if you want to be a part of our traders family, don't forget to subscribe, and also please don't forget to join our channels, the free channel and also a VIP channel. We are waiting for you then. We for sure have a place for you there. And now guys, I believe that we should move on to our second currency pair for today, and exactly the pair of Canadian dollar and Japanese yen. And let's get to a technical analysis of this currency pair. And just like the first pair, here we see constant drops and that our pair was very stormy. But now, after a confident fall, I see that our pair has reached the level of the support line, and I actually don't believe that it will continue to fall. So I believe that the best decision will be, the most good and correct decision will be to point out that our pair will begin to grow in price. So let's do exactly that. I believe that it's very important for any trader to understand when the pair is reached its support line or the resistance line. So I think that right now we will see how our pair will grow again. And now guys, let's keep talking about our topic for today, and now we will talk about the mechanics of supply and demand. Supply is the availability of a certain asset in a given period of time. As the supply of a certain currency grows, it depreciates. If there are too many sellers or watermelons in the bazaar, they are forced to drop prices so that someone buys them. On the other side of the economic equation is demand, how popular an asset is. Demand for a currency is directly opposite to the supply in its effect. The greater the demand for a currency, the more expensive it is. The smaller the demand, the cheaper it is. If a crowd comes to the market thirsty for watermelons and there are few of them, then sellers raise prices. The international currency market Forex is a global currency flea market where private traders and companies sell and buy currencies on a breathtaking scale. Economically, strong countries tend to have strong currencies. Therefore, working with the foreign exchange market, we first of all work with the economy. As a result, the supply and demand for the currency fully depends on the economic condition of a particular country. Restrictions on the movement of capital have been lifted in most developed countries of the world. Therefore, now it is the global market that decides what the exchange rate of a particular country will be, depending on the net balance of supply and demand. There are three important implications from this. It is price movement in a free market is driven by supply and demand. The price already includes all the factors that affect it, and the price is an equation where the influence of two forces tends to zero. The support level is always at the bottom. When demand is stronger than supply, the price moves up, unable to break through a certain price level. This is where the bulls work and the market is bullish. At the support level, market participants expect that demand will exceed supply, so the price drop will slow down near the level. The price is then expected to bounce up, as support is a price level at which demand is strong enough to keep the price from going lower. This is how the market, which is a gathering of desires of millions of investors, believes that the price has already gone low enough and it's time to buy. The price reaches the level, the wave or purchases begins. It is quite logical that as the price falls to the support line and becomes smaller, buyers are more and more interested in buying this cheapest asset. Demand starts to grow and then the price goes up. And the resistance level is an area where supply exceeds demand excessively, causing the price to stop rising and begin to fall. This is a kingdom of bears and sells. If, in the opinion of market participants, the price is too high, then mass sales begin when the price is reached. In other words, at the resistance level, selling pressure is higher than demand. Sometimes this pressure is so noticeable that the price quickly changes its course. And why does the price not go beyond this level? The pressure of those who sell is too great. The closer the price is to resistance, the more active the sellers and the less interested the buyers. When price touches resistance, supply exceeds demand and prevents the price from rising even higher. And now guys, looking at our screen, that our second currency pair also gave us some profit. So let me remind you once again that you should not forget to subscribe to our channel, leave the like and a comment, because it's always nice for me to see the results of my work and you who are satisfied with the results and the knowledge you got. And also please don't forget to follow the link in the description and join our free channel and also a VIP channel where people are earning money right now. We're having signals every single day that help people to fix their financial situation and also get their life being more comfortable and convenient for them. So if you would like to be one of those people, I am very much glad to welcome you there. Zach from Harvest Trade was with you. I wish you all to have a fantastic day. Goodbye.